Here for more on how investors should position and think about these escalating geopolitical risks is Jan van Eck. He is the CEO of VanEck Funds. It's great to see you.
Good to see you, Kelly.
Halima just was talking there about China and the kind of knock-on effect this could have and whether they've been, as Doug Burgum said, stockpiling to maybe be ready for a scenario like this. And what would you be kind of following there?
Yeah, I mean, there's one concept or one dimension of this that no one seemingly has mentioned, which is Kharg Island. What's Kharg Island, right? It's where 90% of Iran's oil gets exported out of. That is a choke point. And if you think of Trump just follows the same playbook that he did in Venezuela, what did he do? He cut off their oil exports, their hard currency. And I think he's going to want that leverage point going forward because we were talking about succession, what happens in Iran, no one knows. But boy, if you control their oil exports, and then the second point, China, bringing that in, where did 80 to 90% of Venezuelan oil exports go? China. Yeah. Where does 80 to 90% of Iranian oil exports go? China. So it's really amazing they're not more involved, I guess. I think they're thinking a lot about what's going on. But the consequences, I think, if we get control over the finances and the oil exports, that would be a major military objective that we're not talking about. Can you imagine the U.S. taking over control of Iran's oil? I mean, that's...
How would they do that?
It all goes through Kharg Island.
Yeah. So it's 90% of their exports. The floating island loading terminal off the coast inside the Persian Gulf. They got a little thing on the other side in the Gulf of Oman. But how would we take that over?
I'm not a military planner. All I'm saying is that I think if you're thinking about this being a permanent demilitarization of Iran, you want to control the money flow. And that's the money flow.
And so for China, which has about 17% of its oil supplies come from Venezuela and Iran, we're told. So it's not existential, but it's problematic. And we have this big meeting coming up between China's leader and Trump in a couple of weeks. And could that be a moment that the U.S. has built up enough leverage that they kind of walk away from this in a mutually agreeable position instead of a position where China's talking to the U.S. about its plans with Taiwan or something like that?
It gives Trump a lot more negotiating power, and I don't think he has to use it, right? He said that in Venezuela. We'll sell oil to whomever, but we want to make sure it's going to peaceful people in Iran. I would think that that's an objective. It's speculation.
No, but we're all speculating. As an industry executive I spoke with this weekend said to me, if you tell me who's running Iran, I'll tell you where things go, because nobody actually knows. It could be somebody who's more antagonistic to the U.S. and the West, okay? Or it could be somebody who's a little more friendly to the U.S. and the West. Maybe wants to make a deal, end the nuclear program. Suddenly Iran's exporting 3 million barrels a day, not 1.5, and the price of oil actually goes down. How much of all of what we're doing right now is trying to figure out what they're going to do in Tehran? Because if you know, tell me.
I'm not sure it matters, right? If they are demilitarized, if they have no functioning Navy, Army, missiles, drone manufacturing, whatever, then kind of who cares, right? So anyway, listen, I think as far as the markets are concerned, oil and gold, if I can turn to that maybe, I think oil was oversupplied coming into this year. We're looking in the second half. We were bullish because basically the shale production can't be increasing the way it has, keeping up with global growth. That's why OIH is up 37% this year. Wow. So I think a lot, right? Energy is the best performing sector in the market. I think so. That's all kind of priced in. It explains why Halima was talking about China building inventories in this more fully supplied market. Because if we're right that it's going to be tighter at the end of the year, that's just prudent.
Yeah,
prudent
maybe
stockpiling.
a little less shale on the margin.